Hi, I'm Raj Manik with Equitus Partners LLP, and we're here with our friends from Barr, Picard Law to discuss family law and divorce issues.
My name is Ken Proudman. I'm a lawyer at Barr, Picard Law and a partner. I also teach the Advanced Family Law course at the University of Alberta. My practice is divorces and separations where there's businesses or farms involved. I'm also an arbitrator, so I can decide how disputes will be resolved without having to go through the court process, and I prepare prenuptial agreements.
My name is Nizam Shijani. I'm a tax partner at Equitus Partners LLP. We have a team of over 50 professionals. We're located in Calgary, Edmonton, Leduc, and Red Deer. And myself, I have a CPA, CA, and an MBA in Accounting and Finance. I'm also working on my LLM in tax law and my trust and estate practitioner designations. I've completed the in-depth tax course as well. My role at Equitus is to provide tax planning on reorganizations as well as general tax advice.
I'm a partner at Equitus Partners LLP, and I'm a chartered accountant, chartered business valuator, and certified in financial forensics. I've got 20 plus years of experience, and I'm court qualified, and I'm responsible for the advisory and litigation support services for our practice. Our focus in this series of videos is to address tax, valuation, guideline income, and business issues as they relate to family law.
We thought we'd spend a little bit of time in this first video just telling you about what we want to cover over this video series. So we're going to start out by talking about some of the basics, just what are the different types of businesses, what are the different types of income as far as the CRA is concerned. Because if you know some of the basics, it's going to be easier to go into a little bit more of the intermediate topics as we go on. When spousal support can be deducted for taxes, when legal fees can be deducted for taxes, so that should help your clients save some money if we can structure our transactions properly. How we're going to pull assets out of businesses is if it's not structured properly, there could be significant tax consequences. So in particular, Nizam is going to come through with a few different types of structures to enable that to happen. He's going to talk about butterfly reorganizations, he's going to talk about pipelines, but we're going to try to keep this all to very short videos just so you can get the basics. When we're putting different types of property into our matrimonial property statement, how much taxes do we deduct on those types of properties? So especially if you're registered investments and when people own multiple parcels of land or larger parcels of land as well, such as farmland. Tax credits, deductions, benefits in general, but particularly how shared parenting is treated, when we can elect to split the GST credit. We're going to talk about the amount for eligible dependent, because that's an area where you could save your clients several thousands of dollars in taxes. We're going to go through family property statements, formerly matrimonial property statements. Hopefully we can get everyone to use the new terminology. And we're going to go through each of the little adjustments that need to be made. Business valuation reports and how they fit into those statements, what type of adjustments need to be made, how you read them. When you've got a report, what do you take out of it, what do you adjust? We'll also spend a lot of time just talking about guideline income in general. So we're going to talk about how do you adjust for personal expenses, profits, third-party payments, all those different types of issues. So I hope you'll join us throughout this video series, and we really hope that you'll learn something.